Hello, traders. This is Chris from AAAFx taking a look at the upcoming week of December 18th in the markets. There are some announcements that we'll have to keep an eye on. That being said, Monday should be rather quiet, not a whole lot going on. We do get German EFO business climate. Sometimes that can move European assets, but I think really the big star of the week is going to be the Aussie monetary policy meeting minutes, because people are going to want to know, what exactly is the RBA thinking. But even beyond that is going to be the Japanese interest rate decision and press conference. After all, there's a lot of talk out there about the Japanese possibly starting to normalize rates. And if that's actually true, that's going to have major implications for what happens with the Japanese yen going forward. I mean, that's been the big trade of the year, has been short the yen and pretty much buy anything against it. So it'll be interesting to see how that plays out. And that, of course, is Tuesday. It's tentative. The Japanese just kind of come out and release it whenever they're ready. They don't have a set time. So Tuesday later on has Canadian inflation numbers. Now, probably not a huge market mover. It would move the Canadian dollar, obviously, but what'll be interesting to see is how is Canada's economy performing, because it is so highly attached and correlated to the U.S. economy. So there might be traders trying to read more into that than usual. We have CPI coming out on Wednesday from the United Kingdom year over year. That's probably a FTSE 100 thing, maybe British pound, but probably more FTSE 100. And then we have consumer confidence coming out of the United States. That will move the stock markets. Although, again, this time of year, we'll have to see. And the main reason I say that is liquidity is going to be drying up. By the time you get to Wednesday, you're already December 20th. Most traders are starting to think about the holidays. Thursday has final GDP out of the U.S. and the weekly unemployment claims number. That, of course, could move stock markets, especially if it's a thin environment. Friday has retail sales out of the UK. I don't think that's going to be a big deal. And then we have GDP out of Canada. And then after that, we have the core PCE price index, which is the Fed's favorite indication of inflation. While that normally would be closely followed, the reality is that this here is probably has some of the wind taken out of the sails due to the fact that the Fed did suggest that they were going to, perhaps start cutting next year. So I think at this point that does take some of that out of the market as far as market moving risk. We do have University of Michigan revised consumer sentiment on Friday. Probably not a mover. By then, most people are going to be more worried about, getting their kids toys and things like that. So I think at this point, probably a situation where really by the time I'd say get through GDP, most participants probably won't even be there at the office. Like I said, core PCE price index normally would be the biggest thing in the U.S., but I think the Fed has kind of front ran that. Flipping over to the charts, you can see that the euro on Friday really fell apart. The weekly candlestick tells a little bit different story in the sense that perhaps there is some kind of hope, but really at this point, I think what you're going to see is probably more noise than anything else. And therefore, you have to understand that as we're stuck between 110 and 107 and a half, it looks like a market that's completely confused, really doesn't know what to do with itself. And that does make a certain amount of sense, considering that we are heading into the Christmas, New Year's timeframe. And therefore, a lot of traders will be looking at this as a time to not be in the market. So expect erratic behavior, but I also expect to see the market probably stay within this range unless, of course, something drastic happens. We'll have to wait and see. But right now, I just don't see that playing out. Friday saw a little bit of a sell-off, but you can see gold pretty choppy, pretty indecisive. So very interesting behavior for the week. I think ultimately you've got a situation again where we're kind of settling into that holiday season funk. Interest rates dropping does help gold. Now, the question is, will those interest rates dropping be a sign of loose monetary policy, or is it going to be a sign of panic and recession? We'll have to wait and see. But right now, it still is going to be a situation where the bears are going to have to convince everybody at this point in time. So the silver market had a bullish week. We did struggle with $24, a major psychological barrier, which, probably not a huge surprise that we struggled there. But I think given enough time, we probably overcome it and go looking towards 25.5. That will be especially true if interest rates continue to drop. Again, though, this is going to be a liquidity issue. That's going to be true with pretty much everything. So spare saying that with every market, but silver is a very thin market at times anyways. So it'll be interesting over here. If we can clear like $26.25, we could go up to $28. In the meantime, I think you get a lot of back and forth with more of an upward bias than anything else. So Bitcoin initially fell during the week, but then turned around to show signs of life at the $40,000 level. 40,000, of course, a large round number, attracts a lot of attention. Makes sense people would jump in, especially retail traders. That being said, next couple of weeks going to be thin, like I said, but 47,500 still the target, and there's really nothing here to suggest that we can't make it. In fact, the nice recovery that we got during the week probably adds more credence to that idea than pretty much anything else. Ethereum continues its consolidation, but on the weekly chart looks very much the same as Bitcoin. Over here, I see the market probably trying to reach the top of this candle at about 2680. I do think we go higher than that eventually. A nice ascending triangle has been broken, which has a measured move to about here. So I think 3,500 is a realistic target. Yeah, we're not getting there anytime soon. So, I wouldn't expect that, but definitely going to have to aim for the upside. Dollar yen. Now I do have the daily chart here. Weekly chart, you can see we bounced off the trend line. This is all about Tuesday. So very neutral on this until we get some type of decision or some type of information out of the Bank of Japan can give us a little bit of a heads up here. Australian dollar had a good week considering it initially fell, turned around to show signs of life, and now looks like it's going to settle right around 67. If it can break above here, and I think it can, it will eventually go looking to 69. Does it get there between now and New Year's? That's a tough ask. We'll have to wait and see. But keep in mind the lack of liquidity can actually help the buyers because people have been short this pair all year. So if you shorted it up here, you might be interested in covering your position. And as liquidity becomes an issue, you can see big moves in both directions. So very possible. May see a little bit of a turbocharge. This is a market that I'm watching very closely. This is crude oil. We initially plunged for the week to only turn around and show signs of life again. I think at this point, the market looks very likely to continue finding buyers on dips. And the reason I say that is because it's such a major support level that we are sitting just above. Furthermore, the markets had basically priced in Armageddon, that we were never going to use oil again. Obviously not the case. If we go into some type of major recession or depression, yes, that's going to whack the oil market. But right now, it doesn't look like that's the case. So as we get closer to New Year's, a lot of these shorts are going to cover, and it's going to put more upward pressure here. Plus, I think at this point in time, we are in the process of bottoming. You know, you look at Brent, it looks very much the same. So both of these look bullish to me. I think it's probably only a matter of time. S&P 500 is probably going to try to make an all-time high this coming week. We'll have to wait and see if that actually happens, but definitely worth paying attention to because that will probably bring in fresh money. That being said, if it happens too late in the year, and we are getting there, may not matter. I do expect sooner or later we're going to see some type of collecting of the profits, if you will. And if that's the case, short-term pullback, but that short-term pullback will almost certainly get bought into. Canadian dollar against the US dollar. So this is dollar CAD. Dollar CAD has sliced through that 50-week EMA after Jerome Powell suggested that perhaps the Federal Reserve was ready to start thinking about pivoting. It's interesting because just 12 days before that, he said that they had not even talked about it. So this has the potential to be a big move. We are getting close to support, though, so we'll have to see how that plays out. But it does have the potential to be a big move because crude oil is trying to make a comeback. And if it does, that brings this pair down as the Canadian dollar picks up steam. Short-term rallies possible. I think 135 offers a little bit of a ceiling at this point. If we break 133, things could go a little bit further south. The US dollar fell against the Swiss franc, but it looks like we are trying to hang on to 0.87. Now, keep in mind, this pair is going to be a little bit different because the Swiss National Bank does not like an extraordinarily strong Swiss franc. And right now, we have an extraordinarily strong Swiss franc. I'm not saying that they've intervened, but they have been known to stealth intervene quite a bit. And this would definitely be an area you'd have to watch for that. So if you start to see some of the correlations break down, maybe the euro is losing steam, but at the same time, the Swiss franc is strengthening, that might be a sign that they're coming in to sell euros. I mean, a lot of manipulation behind the curtains. Really, I think what you need to look at here, it's right around 88.20. If we can take that out, it could go all the way to 90. Otherwise, it's going to be a slow drift sideways into the end of the year. One market I am definitely keeping an eye on is the DAX. The DAX has been out of control for a while, just straight up in the air. And as a result, I think you have to be very cautious buying it here. The DAX clearly has overextended itself, and the weekly candlestick shows that in spades. At this point, I think a deep correction is probably needed, probably down to 16,000 euros. Doesn't mean we'll get it, but we are certainly overdone at this point and have to be very cautious. You just can't chase performance at this point. You are definitely playing a very dangerous game. Liquidity is going to become a major issue. Plus, keep in mind that the ECB just stated that they hadn't really discussed cutting rates. So unlike the Federal Reserve and the U.S. indices, it does not have that cheap money boom to it. So the DAX may end up being an underperformer soon. Now, is that right now? We just don't know, but I would not be looking to buy it here. I think you're just far too dangerous in this area to think that you can just throw money at it. FTSE 100 pulled back pretty significantly on Friday, and the weekly candlestick looks horrible. So this kind of brings the whole idea of, maybe the stock markets are done in Europe because the Bank of England doesn't seem loose with its monetary policy either. Plus, something that's going to come to the forefront is sooner or later people are going to ask, is a bank loosening, the Federal Reserve loosening its monetary policy, is that a good thing? It could be a sign of a recession. If that's the case, stocks could get whacked. And again, it goes back to all of the gains that people have made for several weeks now. Are you going to want to hang on to it into the Christmas holiday? Dow Jones 30 has gone straight up in the air. This has been a ridiculous move. The weekly candlestick is a fresh new high, but from a longer term perspective, it's really difficult to chase this. I think at this point, we really need to see a pullback. Will we get it to 36,000? I don't know. Wall Street has a really good habit of coming in and pushing the market around, getting it way up, getting all the retail players in at a certain point and say, here, hold my bags, and they exit, and you get to hold, the Dow at 38,000, and they exit. Is that what's happening? I don't know, but there's a high possibility of it. British pound US dollar weekly chart has broken above the 1.2750 level and the 200 week EMA. Both could cause some issues, and I think at this point in time, probably going to continue to consolidate between the two moving averages. I just don't see any hurry. What I did find interesting, though, was the Friday candlestick was pretty ugly. That was a really ugly candlestick considering how it started out. It started out, we're just kind of bouncing around, and then we just fell. So I don't know. You have to ask questions sooner or later. Do we have to make a bigger decision? Yes. Do we have to do it between now and New Year's? Probably not. Nikkei continues to just kind of kill time above this trend line. Weekly candlestick, not anything to get too excited about. Again, all of the stock markets are starting to show signs of cracking. They haven't broken. And it could just simply be people taking profit again. You just don't know. But you definitely need to be very cautious at this point. Now is not the time to go out chasing performance and chasing the move higher. This one is going to be highly dependent on that Tuesday Bank of Japan meeting as well. So, very dangerous one to be involved with. The NASDAQ Friday closed out. Looks like it's going to close out somewhat positive. We're kind of like right here at the highs. Can we break out? It's possible. It's very possible. This one does tend to overreact. We'll see, though. For what it's worth, the daily candlestick did kind of save itself. It was forming a very ugly shooting star at one point. Buyers came in at the end of the day. Over here, British pound, Swiss franc looks like it's trying to make a statement. If we can get above the uptrend or the downtrend line, like I had mentioned, I think last week, it'd be a very good sign. We have both central banks out of the way, so looks like we're content to kind of hang around here. There are a couple British numbers this coming week that could help propel it, maybe kind of send it back towards 115. At this point, I'm not really keen to short it. It's just that we don't necessarily have a reason to buy it quite yet. Having said all of that, keep in mind that this next week could see very outsized moves, or it could be almost nothing at all. You never really know going into the holiday season what you're going to get. This year has seen a massive amount of returns in the stock markets in the US, so I do expect to see some massive selling, or better yet, just profit taking at one point or another in the next week or so. So we may have a day where we're down like 3%. It doesn't really mean anything other than, people out there want to take their profit and go home. And, who can blame them? So with that being said, be cautious this week. Understand that the moves are greatly exaggerated and they don't necessarily mean anything in the longer term sense. Most indices look like they're ready to pull back a bit. And that's probably, again, due to the time of year. There is a cyclicality. We run the markets up for the first 15, 20 days of December, and then we bring them back down because everybody makes their padding for the year. If you can add a few percent to tell your clients, if you're a money manager, what you got out of the market, why wouldn't you? That being said, I do think that we are setting up for a very volatile January because we have front run so much and we have assumed so much. And the main question for the next several weeks is going to be, did the Fed talk about pivot because they're worried about something? What have they seen to make them in 12 days completely change their tune? That is something that markets will move on every rumor that's floated out there. So be advised that we are entering a very difficult time of year, a very dangerous time of year under normal circumstances. And with all of the nonsense that's kind of floating around the Fed and other central banks at the moment, could be especially so this year. So make sure to keep yourself safe And understand that this time of year, it's quite common for traders to take 2 weeks off. But even those who don't will generally cut their position size in half or even lower than that in order to mitigate any losses. If you've had a tough year, now is not the time to try to catch up.